Hey YouTube family, Mike Jones here, back with another video on my channel where we talk about all things investing in personal finance with the genuine hope that we'll be able to inspire someone to go ahead and get started with their financial freedom journey today. With that said, today we're going ahead and getting into my Webull portfolio. And before we go ahead and do that, if you would take a short moment to go ahead and just smash that like button, hit the subscribe, leave a comment if you like, that'd be really awesome. Thank you so much for the support so far as we continue to get closer and closer to 1,000 subscribers. We're really trying to hit that mark by the summertime. And so we'll see what happens, but let's get right into it. Again, thank you so much for coming. I do want to go ahead and start off by saying that I'm a little disappointed in the progress of my portfolio this week. At the beginning of the week, it looked like we were going to hit a new plateau, that $17,000 milestone in my portfolio. But every day was very volatile. And the reason for that volatility was based solely on Tesla, which we will cover in this video as well. Also, if you would comment down below if you like the new format of me screen recording on my desktop and kind of just giving you a full picture view from the desktop. Let me know if you like that better, if you like it better when I screen record from my phone. With that said, let's get into the details. As you can see right now, the market is still open. It's about 3:02 p.m. And we are at a value of about $16,352.20 with a profit of unrealized profit of $5,970.28 for a 57.5% return. Now, earlier this week, as I previously said, we were higher up. We had hit like 16,900, almost close to 17,000. So we were at a 60 plus percent return. Actually, if I go right here, I think I'm able to show you just exactly where we're at. So on that's on February. So let me see if I can do the week. Bear with me because I am doing this off of my desktop. So we'll just go ahead and start right here. On March 12th, we were at $16,582.05. On March 13th, same thing. March 14th, the same thing. March 15th, there's that $16,900.19 that I was talking about. We also went back down to on March 16th to $16,608.29. On March 17th was St. Patrick's Day. We hit $16,874.23. And then, for whatever reason, it decided to decline on March 18th to $16,366.32. And we've had a decline, a daily loss of $15.16 today, as you can see right here. Now, and that comes up to about 0.72% loss today. Now, we do have a cash balance of $27.90, which comes from the dividends that we receive from some of the stocks in our portfolio, and total receivable. That's the amount that we're set to make in the coming days, and that's $9.58. As you can see here, ADT, which is a free stock that we received, is going to give us a dividend payout of 3.5 cents. A dividend payment of 3.5 cents, not 35 cents. So that's set to come out on St. Patrick's Day, actually. But as you can see, our first stock that we have right here is ADT. We have a quantity of 1, and we got it at an approximate value of $7.74. And so we've made 21 cents off of it so far for a almost 3% return. And everything in our portfolio, before we go through it, everything in our portfolio is a long-term hold. Now, with the free stocks, I'm more willing to go ahead and sell those if I don't believe in them. But I've also found out, like, by selling some of my free stocks, that could come and bite me in the butt in a couple ways. And the way that it can do that is, for the company to continue to profit and for the share price to continue to raise. So what I've been doing recently is just whatever free shares that I receive, go ahead and hold them, because it's actually worked out to be some of my biggest gainers in the portfolio. Next up, we have Hyliion Holdings. I went ahead and bought one share of this at an average cost of $16.23. And in the time since then, we've lost $3.09 on this, which is a 19% loss. One of the biggest losses in our whole portfolio. Now, with Hyliion Holdings, it's a stock that is in the EV sector, and I'm pretty bullish on it. I haven't really looked up the news on what's causing it to go down. Maybe it's just not as popular as it was, because there's a lot of hype behind it, and because things aren't moving as quickly as people might have expected, maybe there's been a sell-off. Not really sure. But moving on, we have Alamos Gold, which we got at an average cost of $18.13, and we've gained 14 cents on that for an almost 2% return. That was another free stock along with this SWN, which is Sweats and Energy. We received this at $3.30, and we've gained $1.40, so a 42% return. And that's what I'm talking about. I've sold some stocks where they didn't really progress after a couple months, and then it's come and bit me in the back where profit 42%, and I can use that 42% to my advantage. Next up, we have Airbnb. Now, everybody knows when Airbnb was being released, everybody thought that the share or the IPO price was going to be around $60 a share, allowing people to go ahead and get in at a higher position. I also was one of those people that thought this would be possible. Unfortunately, that wasn't the case. There was so much hype behind Airbnb that everybody boosted the price to make it, to where it was $149 a share on opening day. I think it opened at 142. But as you can see, we've profited some money off of that with $45.44 returned for a 30% return, which is awesome. Then we have Rocket Companies, which is a company I truly believe in. And this is a company that does like mortgage and insurance and stuff like that. And we have two shares at an average cost of $21.12 approximately. And we've returned $4.14 for a 10% return so far. Coca-Cola, we have one share in this portfolio at an average cost of $53.04, and it's down $2.39 right now for a 4.5% loss. We believe in Coca-Cola wholeheartedly. We actually are considering going ahead and doing a full detailed analysis on Coca-Cola, all the reasons why you should buy the company. And so if you want to see that, make sure you go ahead and comment down below to let me know that you would like to see that. Next up, we have AbbVie. We have one share at an average cost of $86.26. And so since we've had it, we've gained $17.65 for an average or for a return of 20%, I would say. And then we have Main Street Capital. We have 3 shares of that, which we bought at a total cost of $91.09 with an average cost of $30.36. And we've gained $25.55 for a 28% return. So that's worked out well. We also have Workhorse Group, which is another company that's in the EV sector, not doing so well right now. Our total cost is $86.62. We bought at an average price of $21.65, and we've lost $22.38 for a 26% loss. We're not really worried about Workhorse Group. There was a couple of deals that were supposed to be made that would be able to help this EV profit in the long term. So we're really not worried about it. And you got to remember, guys, when Tesla first started, it was very low priced, and there wasn't much hype around it. Some people believed in it, like my uncle, who had bought thousands of shares at the time. And it didn't do much for the first couple of years. I mean, they were producing cars and they had the concepts and everything, but it wasn't until I would say 5 years down the road that they started to see some absolute profit. So really not worried about Workhorse Group or Halion in the long run. Then we have Genius Brands, which is a company that does cartoons, and they even have a cartoon about Warren Buffett. So as you can see here, we got in at an average price of $1.36, and we've gained $5.94 so far for a 72.79% return. CVS Health, we got one share, unfortunately, and we got that share at $65.99. We've returned $7.26, which is an 11% return. I say unfortunately because I wish I would have been able to get more shares of CVS. There's a lot of companies in this portfolio that I was only able to get one or two shares of, just because of I wanted to be diverse, and two, there were so many companies that I believed in and wanted in this portfolio that I wanted to be able to get as many as I could. Next up, we have TELUS, which is a company I have 6 shares in, and we got in at an average price of $18.52. And as you can see, we've gained $14.02, which is a 12.5% return. We also have Shaw Communications, which is like its competitor, and we got them at an average price of $17.87, and we've got a return of $46.63 for a 52% return, which is absolutely phenomenal. Walgreens, we have 10 shares of Walgreens. We firmly believe in Walgreens. As you can see by the $387.13 we spent on the company at an average cost of $38.71 for those shares, and we've gained $138.07. Our only regret is that we weren't able to get in on more shares. We also have Simon Property Group, 5 shares of that. Only regret here is that we weren't able to get 10 shares in each portfolio. We were able to get 10 shares total, but not 20 shares. And our total cost was $340 for an average price of $68.06, and we've gained $243.13 for a 71.44% return. Apple is actually down today, under the price that I actually bought it at post split. As you can see, we bought at an average price of $121.38, and we've lost $13.88. Most of that's from today, so it's a 1% loss, but that's okay. That's a buying opportunity. If you have no shares of Apple, I highly suggest getting in on it. Apple, before the split and before it went crazy, was actually at around $225 a share average, so I still think it's highly undervalued, $100 worth. So as soon as I have some leeway with my funds, I will definitely be contributing more money to that. Bank of America. This is a preferred share that I have. We got in at $25.99, and we've lost 56 cents. And we've had this stock for almost a year, so losing 56 cents is really no big deal to us. It gives us a solid dividend, and we're just happy with it. So the 2% loss we're not really worried about. We have Keurig Dr. Pepper up next, and we've got one share at an average cost of $28.41. We've gained $5.66, and that's an almost 20% return, so that's really good. Again, our only regrets with these companies is that we weren't able to get a higher quantity at that price. Whirlpool is up next. We got in at an average price of $137.40 or 4 cents, sorry. And we've gained $81.42 for a 60% return. We might want to go ahead and do a little more research on Whirlpool and see if we want to buy a couple more shares of that as it continues to increase. We also have Allstate up next, which hasn't really made a big splash, but that's okay with us. We got in at an average price of $103.34, and we've gained $9.90, which is a 9.5% return. Next up is W.W. Grainger, which we bought at $328.85, pretty hefty price, but we've gained $71.69 for a 22% return. Next up is Fastenal. And Fastenal there's a funny story about that. I've said it before, but I was between Fastenal and a company called Fastly, and both were at a similar price, around the $40 range when I came up on both of them. And I decided to go ahead and buy Fastenal Surf. I decided to go ahead and buy Fastenal first with the intent to buy Fastly next. By the time I went back to Fastly, I was it was doubled the price. So it went from $40 to about $92. And so I missed out on some big returns in that sense. But that's just, one of those things where you live and, you know, you live another day. Trading is one of those things where you're going to miss out on some big deals, but as long as you stay focused and you buy and hold and you make smart decisions, you'll still make profit. It might not be the insane profits that you want every single day, but it's worth it. We also have Mercury General up next. As you can see, we bought at $42.43 a share, and we've actually gained $18.14, which is phenomenal for a 43% return. We have Duke Energy up next, and we've gained 88, or we've gained, I wish we gained $88. We've gained $3.97 for a 4.5% return. We have Eaton Corporation, which we bought at $88.29, and we've gained $45.71 for a 51% return. Like I said, these are my only regrets are that I wasn't able to get in on more shares of these companies. John Deere is definitely one of those companies where I got in at $157.79, and we've gained $215.19 for a 136% return. Chevron is something we bought at $96.20, and it's up to $103.40, which is a $7.20 return. And the funny thing is that when we bought Chevron, it immediately went down. It went down like $10 or $12. But I knew that it would bounce back in a strong way. So happy to see that. We also have 5 shares of BP. We got in at an average price of $18.50, and we've gained $34.66 for a 37.5% return. BMO is another company we have, and we bought it at an average price of $54.50, and we've gained $34.70 for a 63% return. BCE is another company we bought, and we got in at $43.01. We've gained $2.35 on that position for a 5.5% return. Assurant is a company that we bought at $107.57, and we've gained $36.14 for a 33.5% return. Tesla, we have 6 shares here, 7 shares in our Fidelity account, and we have an average price of $222.76, and that was a total cost of $1,336.57. But we've gained $2,576.03, which is a 192% return on a bad day. And I say on a bad day because Tesla's share price was, like a month ago, it was $740, $730 or something like that. So this was up to about $3,000 in profit. But the rest of my portfolio, as you can see, is doing fantastic. And that's what I'm really happy about. When I originally had this $5,900 in profit, a lot of that came from Tesla. Over half of it actually had come from Tesla. And now we're seeing that my stocks, the rest of my stocks in my portfolio, are coming along for the ride and starting to make major profit. Next up is Helmrich. We have 1 share of that. We bought at an average price of $20.94, and we've gained $9.73 for a 46% return. Aflac, we were able to get 2 shares of that. We love Aflac, and so we got in at an average price of $36.93, and we've gained $29.12 for a 39 8.5% return. OKE is another company I've been talking about for a very long time. We got in at an average price of $32.32, and we've gained $81.50 for a 50% return. Still not even close to where it should be. OKE is a company that's around the $70 to $75 range. And once it gets there, it's just going to blow up. People are probably going to start trying to get back in on it. But it's a solid company, and I would highly suggest looking at it if you haven't already. Berkshire Hathaway, $185.88 for one share. We have gained $64.92. Unfortunately, I'm too poor to go ahead and buy the Class A share. That's like $326,000 right now. But it is what it is. We have Hershey here. We have one share at an average price of $135.37, which we've gained $22.03 for a 16% return, which is phenomenal. We have Clorox up next, which we bought at $203.80. Now, I'll be honest, I'm surprised that Clorox is down almost $18 for a 8.5% loss, but that is a very attractive price of $186.13 that Clorox now has, and I might consider going ahead and just pulling the trigger on buying that because it's undervalued. Next up, we have Goldman Sachs. We bought at an average price of $204.26. And since that time, we've gained $139.94 for a 68% return. Amgen is another company we believed in. We got in at $225.57, and we've gained $20.37 for a 9% return. Lam Research is a company I truly wish that I had bought 4 shares of, because I live in the area where Lam Research resides. And what I can say is I already truly believed in this company, but I thought the price was a tad bit steep. I was very wrong. As you can see, it has almost 1x with 99.87% returned. Next up, we have Kimberly and Clark right here. That we bought at $141.05, and we've lost $10.73. But we truly believe in this company. We believe that it is super solid. So this is just an opportunity for us to go ahead and pull the trigger and buy some more. Next up is a company I've raved about since it came out as an IPO, and that is DKNG, or DraftKings Incorporated. I have said from the very beginning that this company I could see reaching $100 at the very least. I bought my T-shares at $33.14. It is now up to $72.21. And so we've gained $78.14 for 117.89% return. Next up is Diageo, another company we really believe in. This company we bought at $140.69, and we've gained $26.50 for a 19% return on that. Another company that we bought is Tanger Factory, and I actually bought this company off of a recommendation when I was just getting started from Andre Jick. Now, Andre Jick, I believe he had hundreds of shares of Tanger Factory, or at least 100 shares of Tanger Factory, back when they were $6 or $5 a share. And at the time, they gave a ridiculous $1.10, $1.14 dividend on each share. Now, I was skeptical of that dividend because it's so highly, it's so much of the actual share price that I didn't think that that dividend yield was something that could keep up. And that was something that was correct. That dividend ended up being suspended. And now Tanger Factory is basically like a growth stock because I've gained $10.71, which is 175% return, which I was originally looking at it as a dividend stock. So it's amazing the turnaround. I just wish that I'd bought more shares and not been so skeptical. We have Meredith up next. We bought our share at $13.39, and we've gained $21.47 for 160% return. Halliburton, we bought 2 shares of that at $10.58. We've gained $22.40 for 106% return. We have JetBlue Airways, 2 free shares that we received at $10.13, and we've gained $21.70 for 107% return. We also have Viacom CBS, which is having a very surprising run right now. We got our 2 shares at an average price of $12.77, and we've gained $169.28 for a 662.80% return, which is absolutely insane. It's actually surpassed Snap, which was at $63 a couple of days ago. But we have 5 shares of Snap at an average price of $8.37. We got that for free, and we've gained $250.35 for a 598% return. We also have Starbucks, which is a company I truly believe in. I don't know if they're overpriced right now with the $106 price, but we've gained $40.82 for a 62% return. Southwest, we have 15 shares. This is my favorite airline. We have an average price of $41.18. I should have went ahead and took a really big chunk of money and put it towards Southwest when it was at $26 a share for like 2 days, and I didn't get to do so. So our profits are only $298.98, which is a 48% return, but that's pretty phenomenal for it to be an airline. We also have WWE, which is surprising me right now, getting to $11.88 in profit, which is a 27% return. We bought this as a joke because we grew up watching WWE. Now, before I bought it, I did see that it had an all-time high of getting to about $80 a share. So I am kind of expecting for it to get back there. That happened when they had the women's movement and they started to empower women more on the show. But it kind of tanked after that. So we'll see what happens in the near future. But next up, we have Bank of Nova Scotia, which is one of my favorite stocks of all time. We have 20 shares at an average price of $45.56, and we've gained $348.16 for a 38% return. I didn't expect to gain this much money on Bank of Nova Scotia, to be completely honest. I bought it because I love their dividend. I love the stability. And I also saw a $11 return in the near future because the price, the 52-week high was $56. So the fact that it surpassed that by almost $7 is absolutely phenomenal. Then we have Ford Motor, which we have 16 shares. I believe we bought 12 shares ourselves, and then we got 4 free shares. So our average price is $7.98, and we've got a return of $78.97, which is hilarious. And we've got a return of 61% on that position. Vanguard Real Estate ETF, we have 1 share. We bought at an average price of $95.15. And this company, or this ETF, has never been in the positive since I bought it. I've had it for a very long time, but we will continue to hold it because we truly believe in it. And if we ever get the chance, we'll probably buy a couple more shares of this company. But we're down $4.56 as of right now, which is almost a 5% loss, which is actually better than it used to be because I was down about $13 in this stock. And last but not least, we have GE. We have 101 shares. 100 of these shares I bought myself, and then I got 1 free share from Webull through referral, and we had an average price of $9.90. And as you can see, we've gained $335.73 for a 33.5% return. But it wasn't always this way. As you know, when I very first started my journey, I bought 142 shares of GE, And that was like, besides that, I had like 5 different other stocks, one share each, and it immediately tanked because I bought it a month before the pandemic and the shutdown. And so I saw this. I saw my returns cut in half on this on this stock, but I just held it, and now we're back up about $4, almost $4 a share on GE. So it's phenomenal that it's come back around and you know made some profit for us. I'm really happy with that, and now I can do covered calls on it. But with that said, I think that's all we're going to talk about today. If you have any questions for me, please feel free to go ahead and comment those down below. If you watched the whole video, please let me know that you did so. Um, if you would go ahead and smash that like button and hit the subscribe, help us get to that 1,000 subscribers mark. That would be absolutely phenomenal. For those who are wondering, we're actually at about 263 subscribers as of right now. So really excited to see this progress over the last couple of months. But with that said, thank you so much for watching. I'll see you in the next one. Thank you, and God bless.